Good day, students. Welcome to lesson 67. In this lesson, we will do the financial statements of non-profit organizations. All right. Okay, so let's start with the trading account. Remember, I said to you that when we work with non-profit organizations or clubs, let's say with clubs, it's not that we buy goods and sell goods like we do in a trading concern. In other words, we won't have a normal trading account where we close off sales and cost of sales unless we have a club and we do it for a specific section in the club, like for the bar or the tuck shop. In a case like that, we will do for each one of those. Let's say it's a bar and a tuck shop and refreshments or whatever that we sell. We will have a trading account for each one of those sections, can I say. So we will have a trading account, let's say, for the tuck shop. And we will calculate the profit in that. We will have one if there's a bar, we will have a profit account a trading account for the bar. If it's refreshments that we sell, whatever, we will have a trading account. But then after we've done that trading account, we will transfer the profit. Hopefully it will be a profit. We will transfer that to the income and expenditure account. All right. Okay. So in a club, we actually just have then, apart from the trading accounts that I've just mentioned, we will have an income and expenditure account. And to that account, we close off all our nominal accounts, all the income and all the expenses. In other words, the membership fees, all the income and all the expenses will be closed off to the income and expenditure account. All right. The syllabus does not require the income and expenditure account. Okay, so therefore we won't do that as such, the income and expenditure account, but they require students to do the statement of income and expenditure. Now, you know, when we have a trading business, a trading concern, that you know by now that an income statement has got exactly the same information as the trading account and profit and loss account. Okay, all those information is is entered directly like that into the income statement. All right. In the case of a club, it works exactly the same way. We will have all the information that we would write, or that would be written in the income and expenditure account. All those information we write directly into the statement of income and expenditure. So I will come to that just now. And then we get the balance sheet, exactly the same as in a trading business. We have a balance sheet. Yeah, as I've said, it looks exactly the same or it works on exactly the same principle as a balance sheet in a trading business. Okay, and then I'm going to work through that example where we need to draw up the accounts, the trading account, the statement of income and expenditure, and the balance sheet. But before we do that, I want you to get a pencil or a pen and a piece of paper, because I want you to work with me through this example. I'm going to ask you to work with me. So I'm going to give you a few seconds to get a pen or a pencil and a piece of paper. Okay. Okay, I hope you're ready. All right. Okay, let's start with that example. What they say is use the information in the trial balance to draw up the membership fees account, the trading account for the tuck shop, and then the statement of income and expenditure, and then draw up the balance sheet. Okay. But then they give you 10 adjustments, okay, and they don't ask you, it's not required that you do the accounts for the adjustments. It is just required that you take the adjustments into account and then obviously adjust the balances of the ledger accounts. All right. Whenever you get an exercise like this, or whenever you get something like this in the exam, I always tell my students, when you need to do adjustments, draw yourself little T accounts and do the entries in those T accounts. Then it's just much easier to know what is the correct amount to transfer to the income and expenditure account or to the statement, and what's the amount to transfer that must be entered in the balance sheet. So I always say, when you have to do adjustments, draw up for yourself small little T accounts and do the entries in the T accounts. All right. Okay, let's start with the first one. It says depreciation is written off on equipment at 10% per annum on the cost price. Okay, what is the cost price of equipment? It's 89,800. Okay, so what is 10% on that? 8,980. Okay, what is the double entry for depreciation? Debit depreciation, credit accumulated depreciation on equipment. Okay, so but now you must just remember you're going to open your depreciation account, open the accumulated depreciation account, enter the balance in that, enter on the accumulated depreciation on the credit side, enter your 4,500, which is the balance. Obviously, there will be no balance under the nominal accounts for depreciation. So you're just going to open the depreciation account and then enter on the debit side 8,980. All right. Okay, that was the first one. The second one, number 2, adjust the interest on the loan. Okay, now we must have a look. What is the loan? The loan, it was a loan from ASB Bank for 25%. Okay, let me just see. Oh no, okay, yeah, 25%. The amount of the loan is 20,000. If you calculate what is 20,000 times 25%, you get, sorry, 20, I just want to do the calculation. 20,000 times 25% gives you 5,000. Okay, so that was what's the interest on the loan that you were supposed to pay. Okay, so the first thing that we check, have we paid money already on that loan? Let's just check there. Yes, we have. Interest on loan, debit 2,500. Okay, so you open your debit, you open your interest on loan account, make yourself that T account, interest on loan. On the debit side, just write the S or a balance, just write B for balance, 2,500, and then do that, the double entry for the adjustment. You're going to debit interest on loan with 2,500, and you're going to credit expenses accrued. Okay, so you open that account, expenses accrued account, or accrued expenses, or expenses accrued, it doesn't matter, expenses accrued, and you debit that, you debit interest on loan and you credit expenses accrued with 2,500. Okay, the third one, stock on hand in the tuck shop, 2,000 Rand. Remember when we worked with the periodic stock system, we had almost the same type of transactions. All right, what is the double entry for that? We credit closing stock 2,000, and we debit the trading stock account with 2,000. Okay, debit trading stock 2,000, credit closing stock 2,000. Okay, number 4, make a provision for the interest on the fixed deposit. The investment was made 2 years ago. In other words, it was longer than a year ago. Okay, what was the fixed deposit? Let's just see what was the fixed deposit. It was 40,000. Okay, Now let's take 40,000 times 20% gives you 8,000. Okay, that was 8,000 we were supposed to receive for the financial year, 8,000. Okay, now let's have a look. What have we received? Or have we received any interest? Yes, we have received 6,000 already. So open your T account, interest on fixed deposit, enter the balance on the credit side or the total 6,000. And now you're going to do the double entry for the adjustment. What is that? Credit income accrued or accrued income and credit interest on interest on fixed deposit 2,000. Credit interest on fixed deposit 2,000 and debit accrued income 2,000. Okay. Then we go on to the next one. The secretary's honorarium has not yet been paid, 250. Shame. 250, okay, for the honorarium. Okay, so now we're going to open the honorarium account. See, have we paid anything into that account? Let's have a look. Honorarium, there is an amount of 260 already in that account. So you open the honorarium account. On the debit side, you write total or T just for total, 260. And now we're going to do the double entry for that adjustment. So you're going to debit honorarium 250 and credit expenses accrued or accrued expenses 250. Debit honorarium 250, credit expenses accrued 250. Okay. And then the water and electricity account for December has not yet been paid. I'm quite sure it's September X1 and not X0. But never mind. There's an amount for electricity outstanding for the year. Okay, let's change that to X1. Okay. All right. Okay. So what's the double entry for that? Water and electricity, you're going to debit water and electricity and you're going to credit expenses accrued. Okay. Debit the water and electricity account. Have we paid anything? Is there an amount in the pre-adjustment trial balance? Let's see. Water and electricity, yes. There is an amount of 570. And then, okay, so that amount you debit that with just like total on the debit side, 570. Do the double entry for that is debit water and electricity and then credit expenses accrued. Okay. Okay, then number 7, half of the interest fees has to be capitalized while the other half may be used for current income. Okay, so we're going to take out of the interest fees account the half that needs to be capitalized. Okay, what is the entrance fees? Let's see what is the total in that amount, 4720. So it's 4720 divided by 2 gives you 2360. All right, and we're going to take out that out of the income account and we're going to transfer it to the fund, to the accumulated fund account. Okay, because it needs to be capitalized. Remember the word capitalized, you know immediately it's capital accumulated fund. Okay, so we're going to take it out of the entrance fees account and we're going to transfer it to the accumulated fund account. So how do we do that? We debit entrance fees, but remember now, first write in your total on the entrance fees account on the credit side of 4720. Write the total, and then you can also write the total make yourself the accumulated fund account with a total of 51,000. On the credit side, 51,000. Okay, so now the double entry for this is 2360. You debit entrance fees with 2360 and you credit the accumulated fund with 2360. All right, and then number 8, interest on the fund investment was allocated according to the stipulations of the estate. I don't think there's anything to be done there because we've already done what was needed to be done. We've already done that. Okay, now let's get to the membership fees account. Okay, there's that long whole story about the membership fees. Okay, remember now, we've got a pre-adjustment trial balance with the membership fees total in that account. Okay, that was the total at the end of January. Now you must remember, immediately think of what did I say in the previous lesson? If we get a total in the pre-adjustment trial balance, it means this was the balance at the end of the year, okay? So in other words, the reverse entries at the beginning of this year, at the beginning of this period, those reverse entries have already been taken into account in that balance. The balance or the total that they give us is 18,050. All right. So think of the membership fees account, the accrued income and the income received in advance for the next year at the beginning of this year have already been taken into account. Okay, as well as all the money that we have received during the year for membership fees. In other words, it doesn't matter if it was for last year, this year, next year, whatever, the amount that we have received is also entered in or was entered into that account. So, okay. So that amount of 18,050, you can write that on the credit side of your membership fees account. Open that account and write on the credit side 18,050. All right. Then let's go back to that example. On the 1st of January, 350 was paid in advance for this year. We've already done that, as I've explained to you, the reverse entry for that. 220 was still outstanding from the previous period. Of the membership fees outstanding for the previous period, 100 was recovered during this year. The balance has to be written off as irrecoverable. What was the balance of the membership fees outstanding? 100. 220 was outstanding at the beginning of this year. They say we have received 100, recovered 100 of that 220. So the difference between those two amounts is 120, and that is the amount that must be written off. Okay, so on the credit side of membership fees account, you will have the fees written off 120. Okay. And then at the end of the current year, membership fees paid in advance for the next year was 460. So on the debit side of membership fees account, we write 460 and we write income received in advance 460. And we are going to credit that account income received in advance. Okay. Open yourself that T account that you don't forget that when we get to the balance sheet. Income received in advance, 460. So you credit that account and you debit membership fees. And then 660 was in arrears at the end of this year. Credit membership fees with 660 and debit income accrued, 660. And open that T account. The same reason why I said that you don't forget that when you get to the balance sheet. Income accrued or accrued income, 660, must be debited. Okay. And then, okay, you know what? Let's do that membership fees account while we're busy with the membership fees account. While we're at it, let's quickly see what is the amount that's going to be transferred to the income and expenditure account. And in other words, the amount that we will write in the statement of income and expenditure. If you add up the debit side, if you add up the credit side, and you deduct the smaller side from the bigger one, you will get an amount of 18,370. 18,370, and that is the amount that you have actually were supposed to receive as income for this year, and that is the amount that you will enter in the statement of income and expenditure. 18,370. All right, okay, and then we get to the last one, number 10 of the adjustments. 1/3 of the legacy has to be capitalized and the balance may be used as current income. Okay, so let's see, do we have a legacy at this stage? Account, in a nominal account there right at the bottom, legacy MGOs, 30,000. Remember when we received that money, we debited bank and we credited the legacy. At that stage, it wasn't clear if what we must do with it. Must we capitalize it, or maybe they said we must wait till the end of the financial year and then we need to capitalize. But it wasn't supposed. We were not supposed to do it immediately. So that is why that full amount was written in the nominal account, the legacy MGOs. That was the nominal account. Okay, so now what we need to do now is to take out the 1/3 of that amount, and we're going to capitalize that. 1/3 of 30,000 is 10,000. So the double entry, do the double entry on your piece of paper. All right, legacy MGOs got a credit balance of 30,000. Debit that account with 10,000 and credit accumulated fund 10,000. Okay, so you debit accumulated fund and you credit, sorry, I'm wrong. You debit your legacy account with 10,000 and you credit your accumulated fund account with 10,000. Okay. Okay, so let's start with the trading account for the tuck shop. Okay, think back of your periodic stock system and think, how have we done the entries for when we've worked with the periodic stock system, when we don't work with the continuous stock system, where we don't have a cost of sales account. Okay, remember, it's exactly the same principle. Okay, you take your sales, you write it on the credit side of that account. The sales was 12,680. Okay, and then you write on the closing stock, you enter on the credit side, and the opening stock on the debit side. Okay, the closing stock was that adjustment number 3, where it says the stock on hand in the tuck shop 2,000. So the closing stock is 2,000. And remember, I've also said you're going to close that off. For that adjustment, we debited trading stock and we credited closing stock. So we're going to close off the closing stock account by debiting that account and debit closing stock and credit the trading account. All right. So it's debit closing stock, credit trading account 2,000. Okay. And then the opening stock was 2,800. We also got that from the pre-adjustment trial balance. That was a debit balance. Remember the debit balance of 2,800. It had a debit balance in that account. So we credit that account with 2,800, credit trading stock 2,800, and debit trading account 2,800. All right. And then what was the purchases? The purchases was 10,400 from the pre-adjustment trial balance, 10,400. And then if we do that calculation, add debit side, add credit side, the difference is the amount that we're going to transfer to the income and expenditure account or statement. And that amount is 1480. 1480. All right. Okay, so let's start with the statement of income and expenditure. Okay, the first entry there will be surplus from the tuck shop, which was 1480. 1480. Okay, the other income, let's quickly go through that. Membership fees. Remember, we opened the membership fees account and we calculated the amount as to be transferred to income and expenditure, 18,370. All right. Entrance fees, then you're going to have a look at the entrance fees account to see what does the entrance fee account look like. And we have on the credit side the balance or the total from the pre-adjustment trial balance was 4720, and then there was that adjustment on the debit side for accumulated fund. Remember that capitalization of the entrance fees. So the amount in the income and expenditure The statement is 2360. All right. And then let's look at other income. Gate money was 3460. There was no adjustment regarding that one. So that amount we get straight from the pre-adjustment trial balance. And then legacy M Gous, 20,000. Okay, if you look at that legacy M Gous account, which you were supposed to open, on the credit side, there was a total of 30,000. And then on the debit side, there is an entry for accumulated fund, 10,000. So the remaining, the balancing amount is that we're going to transfer to the income and expenditure account is 20,000. And that is where I got that 20,000 from. Okay, so if you add those income, or those 148,018, those amounts, you get an amount of 45,670. Okay, then we get to the expenses. The first one, water and electricity. Yes, you've opened a water and electricity account, and the total on the debit side was 570, and there was an adjustment on the debit side for 180. So the two amounts we added up. On the credit side, we have income and expenditure, 750. So we credit water and electricity, debit income and expenditure. So the amount for water and electricity in that statement is 750. Okay, affiliation fees, that is what we paid. We got that straight from the pre-adjustment trial balance, 3,000. Bank charges, 230 directly from the pre-adjustment trial balance. And then the honorarium. Now you must go back to your honorarium account, which I said you must open to see what the total of that in that account is. Remember, it had a debit of 260, an amount of 260 on the debit side from the pre-adjustment trial balance. Then we had an adjustment of 250 in that account. So that is where we get that 510 from. 260 plus the 250. Okay, and then we get depreciation. That is why I said you must open your nominal accounts, those that have been affected by adjustments. Otherwise, you can easily forget about an entry or forget about an account like depreciation. I'm sure if you haven't opened this account, you would have forgotten about the depreciation. All right, but you open that account so you won't forget it. It's 8980. Okay. And then exactly the same principle with membership fees. You open that T account because of that adjustment there that you had to write off. Remember, the adjustment was you write the rest off. Okay, so it was 120. So you credited membership fees with the adjustment and debited membership fees written off. And that is where we get that 120 from. Okay. So if you add those expenses, you get an amount of 13,590. Okay, and that was the total expenses. If we take the income less that 13,590, you get a surplus from general activities of 32,080. All right. Okay, and then we just add the interest income and subtract the interest expense. So we add interest income, which also had an adjustment. Remember, it was that interest on the fixed deposit. On the debit side, we had 6,000. The adjustment was for 2,000. So that is where we get that 8,000 from. That's the interest income, and there's there you'll see that one. So it is that the detail of that is indicated in note number 1. Interest income 8,000. Okay, then we get that total surplus before the interest expense is 40,080. It's that just the 32,080 plus the 8,000 gives you that 40,080. And then we need to subtract or deduct the interest expense, which was 5,000. Remember, there was also an adjustment regarding that interest on loan. The total was 2,500, and then there was an adjustment for expenses accrued 2,500. So the total there that we have that we must transfer to the income and expenditure account was 5,000, and that is where we got that 5,000 from, which we deduct from that surplus of 40,000 to get the net surplus for the year of 35,080. Remember what I said in the beginning, we don't use the term profit, we use the term surplus. All right. Okay, in a non-profit organization, we're not supposed, or our intention is not to make a profit. So that is why we call that term surplus. So its net surplus for the year is 35,080. Okay, now let's get to the balance sheet. But before I'm going to do the balance sheet, I'm first just going to go through the notes quickly, all right, before we enter the amounts in the balance sheet. Okay, I've already done interest income and interest expense. The 8,000 for interest income was for the interest on the fixed deposit, and that was the interest on loan was 5,000. Those two amounts we've entered in the statement of income and expenditure, so I've already done that. That was note number 1 and note number 2. Okay, so now we get to the fixed tangible assets, to that note number 3. Okay, we start with carrying value at the beginning of the year. How did we get that? They give us the cost for equipment in the pre-adjustment trial balance. That was the cost of 89800. That was at the beginning of the year. What was the accumulated depreciation at the beginning of the year? Was 4,500. Okay, so you know carrying value is actually the cost price less accumulated depreciation. All right, so the cost price less that accumulated depreciation gives you the carrying value at the beginning of the year of 85,300. Okay, then we write off this year's or the current year depreciation, which we calculated as 8,980. We must deduct that, and then we get the carrying value at the end of the year. So it was the carrying value at the beginning of the year, which was 85,300, less the 8,980, gives you the carrying value of 76,320. All right, and how? Just to make sure that amount is correct, we get the cost price of 8,980, and then the accumulated depreciation was, if you look at the depreciation account that you were supposed to open, you would see there was a balance of 4,500 at the beginning of the year, and this year's depreciation was 8,980, and that is where we get that 13,480 from. Okay, so the carrying value at the end of the year is 76,320. And that is also the amount that we will write in the balance sheet, the carrying value. Okay. Then we get to inventories. The tuck shop, the closing stock 2,000, that was an adjustment which says the closing stock, the value of was 2,000, adjustment number 3. So that's plain straightforward. Then we get trade and other receivables, which is income accrued or income receivable. If you look at your accrued income account, which you were supposed to open, you will see on the debit side there is interest on fixed deposit 2,000 and membership fees 660. Okay, if you add those two, you get that amount of 2,660. The membership fees and the interest on the fixed deposit, the two adjustments. Okay, cash and cash equivalents. We just got those amounts straight from the pre-adjustment trial balance. Bank 1,350, petty cash 100, so that gives you the total of 1,450. Okay, accumulated fund. What was the balance at the beginning of the year? You can also actually look at the accumulated fund account that you were supposed to open. Okay, the balance at the beginning of the year was 51,000. Okay. Then there was entrance fees capitalized. If you look at your accumulated fund account on the credit side, you'll see the entrance fees, 2,360. You will also see the 10,000, which you actually transferred from the legacy account. So that is that 10,000. and then the surplus that we've calculated was 35,080, and that gives you the balance of your accumulated fund account at the end of the year of 98,440. Okay. Then we get to the funds, number 8. The bursary, Silje bursary fund is 30,000. That was bursary. Let me just see. We got that straight from the pre-adjustment trial balance. That's 30,000. Okay. Silje bursary fund, we get that from the trial balance. I don't know why there's a note for that. But in any case, all right. Okay, we got that from the pre-adjustment trial balance. Trade and other payables, creditors control. There is a balance for creditors control in the pre-adjustment trial balance of 600. And then if you look at the accrued expenses account, you will see that there was interest on loan, which was the first adjustment, 2,500 on the credit side, that honorarium of 250 on the credit side, and the water and electricity of 180. Okay, and that gives you the accrued expenses of 2,930. All right, and then the other account under trade and other payables is income received in advance. That was the adjustment regarding the membership fees, and that was 460 Rand. Okay, if we add those amounts, we get the total for trade and other payables, which is 3,990. Okay. Okay, I'm quickly going to go through the balance sheet, the entries in the balance sheet. I see my lesson is getting a bit long now. Okay, so I'm quickly going to go through the balance sheet. Okay, we start with non-current assets. Remember, balance sheet, we always, we've got like the two headings under the assets, non-current assets and current assets. Non-current assets consist of tangible fixed assets and financial assets. Okay, so we get the tangible assets, that's 67320. We got that from the note number 3. And then the financial assets is the deposit in Star Bank of 40,000 and the investment Silje bursary fund 30,000. Those two add up to 70,000. And the tangible assets was 76320, and those two amounts add up to the non-current assets of 146,320. Okay, then we get to the current assets. First one, inventories, 2,000. That is also, you can get that from the notes, but it's also actually straight from the pre-adjustment trial balance. Trade and other receivables. If you look at the notes, it's note number 5, 2,660. Cash and cash equivalents is 1,450. It's just the total of bank and petty cash. All right. So that the total of your current assets is 6,110. All right. So we've got the non-current assets and the current assets, and that gives you a total of your assets of 152,430. Okay. Then we get to the accumulated fund, 98,440. We have actually done that already in the notes under number 7. So you just transfer that amount at the end of the month, at the end of the year. That 98,440, we got that from note number 7. And then the funds is 30,000. That you get that straight from the pre-adjustment trial balance. Let me just see. Yeah, that it's the Silje bursary fund. Yeah, that is under note number 8. It just gives the details of the fund there. So members' equity. Remember, I said to you also in the beginning that members' equity, members' equity consists of all the funds together with your accumulated fund. Okay. Okay, then we get to and then liabilities are also divided into non-current liabilities and current liabilities, the same as the assets are divided. So non-current liabilities, that's actually long-term, that's outstanding for longer than a year. So the long-term loan is the loan in Absa Bank, which is 20,000. So the total for non-current liabilities is 20,000. Okay, and then we get the current liabilities, which is trade and other payables, and we also calculate that in the note number 9, 3990 for trade and other payables. All right. Then we get the amount for current liabilities of 3990, non-current liabilities 20,000, and members' equity 128,440. If we add those three amounts, we get the same as the assets, which is 152,430. Assets equals equity and liability. In this case, it's not owner's equity, it's members' equity and liabilities. Okay, and that is it for this example and for this lesson. All right, and I'll see you in lesson 68. And in that lesson, I will mark exercise 4H and exercise 4I. For those of you who want to do those exercises, I will mark 4H and 4I in lesson 68. Goodbye, keep well.